Welcome, Jonathan. It's good to have you with us.
Hi there, Nisha. How are you today?
We're good. I'm doing well, and we're happy to have you. So let's go ahead and have a look at your presentation.
Great. Is my screen sharing? Can you all see that?
Yes, we can see your screen and we can hear you clearly. Please go ahead.
Fantastic. Thank you very much for the introduction, and good morning or good afternoon to you all today. It's a great honor to be able to present our topic to the audience, and I'd like to thank Exito for bringing the summit to the African region. I think that we can all agree that the last few years have made things very interesting in terms of how we engage with one another. So I really look forward to hopefully being able to meet you all face to face in an event next year. I wanted to take this opportunity to briefly introduce Kyriba at a high level, as some of you may not be familiar with who we are and what we do. Kyriba is a leader in enterprise liquidity and cash management solutions, offering the most comprehensive suite of tools and cloud technology. We are a rapidly growing company with close to 900 employees in over 20 countries, including the Middle East and Africa. What underpins our platform is not just the rich set of functionality, but our vast connectivity network located on a single SaaS platform. With over 2,000 corporate customers that represent 20% of the Fortune 500 and over 65,000 active users, the average revenue of our customer base is around $5.3 billion. This demonstrates that the platform caters for every single size customer and can be integrated and configured into the most complex pre-existing workflows. Kyriba has connectivity in its DNA and is driven by research and innovation. We offer a truly global community of customers, partners, and talented employees, reaching more than 100 companies and countries worldwide. So on to our topic for today. What is enterprise liquidity management, or ELM? Well, traditionally speaking, if we look at the concept of liquidity from the markets and banking industry perspective, it refers to the extent to which the investment markets, such as a country's stock market or city's real estate markets, allows assets to be bought and sold at stable, transparent prices. It also relates to having the ability to fund financing commitments and to meet the demand for withdrawals. An extreme case could be being a run on a bank. However, this is obviously highly regulated to maintain liquidity coverage ratios through various stress testing mechanisms within the banks. Now, what does liquidity management for an enterprise look like? In simple terms, it refers to the ability to pay short-term obligations. The term also refers to a company's capability to sell assets quickly and raise cash. Sounds relatively straightforward, right? The reality, in fact, is that CFOs have a tough balancing act to follow. How to pursue strategic growth initiatives while still minding risk. What's needed is a strategic approach to treasury and finance that elevates the impact of liquidity to generate new value by gaining greater control over its users, especially in volatile markets. We call this enterprise liquidity management. A corporation's approach to ELM needs to be holistic, well-structured, and is increasingly dependent on the right technology and tools in order to achieve better financial outcomes. We are seeing liquidity planning becoming even more important now than ever after recent events. How long can your business sustain for if there's no revenue coming in, or if production is halted, as an example? A new metric called the Days Cash Survival, which is actually a liquidity index, is being actively adopted by enterprises globally, indicating how long the businesses can be operational for in the wake of critical disruptions such as COVID-19 and all the implications associated with such events. Let's have a look at some of the most important strategic objectives that treasurers and CFOs should be concerned about today. I've listed just a few of the most common objectives we have come across when dealing with corporations of all sizes. Obtaining clarity and visibility into cash and liquidity is a fundamental requirement for any treasury department. Without that, it is nearly impossible to support critical financial decisions and strategic business objectives. Timely and accurate data is a key requirement for the treasury teams to create accurate forecasts that deliver confidence throughout the organization. And having the ability to centrally and efficiently drive treasury processes whilst adhering to internal compliance policies and external regulations is a must-have. Liquidity risk is one of the most or foremost challenges faced by treasury teams today. ELM offers the best practices and innovative solutions on how to effectively manage enterprise-wide liquidity whilst processing payments. Let's not forget about automation and the need to redesign manual processes, which in itself requires a huge amount of focus and dedicated resources. And lastly, a key objective, focusing specifically on mitigating operational risk and fraud. I'm sure that many of these points are probably keeping you up at night and continue to be topics of concern within your business. But rest assured that there are ways to solve for this. As we have just seen in the previous slide, there are a multitude of objectives to prioritize when it comes to the management of treasury functions. Every corporation will have different operating models and prioritize these functions differently, depending on the nature of their business. So we wanted to hear from our vast network of clients to better understand what they believe is key. A recent survey of treasury professionals provided us with the following breakdown of treasury functions which they believe lead to effective ELM. Let's have a look. 66% of the participants believe that cash and liquidity management, as well as forecasting, is paramount. 46% believe that risk management across the board is critical. The same percentage think that financial transactions across multiple instruments is key, whereas only 13% focused on supplier and treasury payments, with 9% opting for supply chain finance. So what insights can this information really give us? Well, to put it bluntly, the duties and accountabilities placed on today's modern treasurers has clearly increased dramatically. Handling traditional treasury responsibilities, as well as dealing with emerging liquidity management tasks, can become daunting, and action plans must be put in place to solve questions like, how do I get extensive managed bank connectivity, enabling comprehensive insights and a 360-degree view into global cash activity? Is it possible to holistically manage all liquidity instruments, including investments, debt, and intercompany, giving the CFO confidence in cash and liquidity availability? What is required for advanced cash forecasting capabilities to enable funding, investment, or hedging decisions? Is it possible to harness a global multi-bank payment solution to initiate global payments and improve overall efficiencies and controls? And how do I prevent fraud before transaction processing, whilst proactively managing vulnerabilities and protecting sensitive data? And lastly, what tools can I employ around managing idle cash to earn double-digit returns by making early payments to suppliers? Do any of these questions resonate with you? Has your organization put plans in place to address this? Where do you even begin? Ultimately, the treasury teams need to evolve, and it's clear that without the correct digital solutions in place, achieving enterprise liquidity management will be a challenge. Let's take a moment to address three important challenges in the realm of enterprise liquidity management. Maybe we can start with digital transformation, as it's driven by connectivity, specifically the lack of connectivity with banks, as well as internal applications such as ERPs. A fully managed bank connectivity service can make all the difference here. Digital transformation also requires strong analytics and the need to reprioritize resources in the treasury team. Globalization and centralization has its own challenges. Corporates are becoming more global, and hence a lack of cash visibility may materialize. There is a strong requirement for centralizing processes across treasury functions to better manage the enterprise liquidity. And finally, governance and compliance. Protecting organizations from increasing cyber threats is a continual battle. Compliance with corporate policy guidelines across the group's entities in multiple geographies also adds another layer. Mitigating application security risks, along with protecting data, is always going to be complicated. It is important to note that in the absence or immaturity of any of these factors exposes the enterprise to inefficient liquidity management that can be precarious, specifically in critical situations such as COVID-19. We have covered a great deal of objectives, functions, and challenges faced by the Treasury teams. Here at Kyriba, we take on a consultative approach and have therefore designed a maturity framework for ELM performance. Let's dig into this a little bit more. As you can see from the slide, activities performed to manage a process can be classified at 4 levels, starting from ad hoc through to strategic. Each level is associated with a certain risk and potential benefits by moving to the next level. Organizations are increasingly moving from a scenario of disparate systems to some form of consolidation or a single source solution. Highly manual treasury processes are giving way to semi-automated and fully automated processes. So, how do you see your organization as part of this maturity framework? Have you taken the time to assess these risks as yet? If you are in the high risk category, I would strongly recommend an urgent review of all of your processes and potentially consulting with a trusted partner for assistance. The ultimate goal is for the Treasury function to become more strategic through end-to-end process automation with analytical tools generating intelligence for better decision-making. Kyriba has been able to provide enhancements to customers at all 4 levels within this framework, and there's always room for improvements to remain competitive. In summary, there's a great deal to be gained by adopting the ELM approach. The benefits will far outweigh the costs and the perceived hassle to implement. Here are some of the key takeaways to remember when considering all of the benefits. Number 1, vast improvements in enterprise productivity. Finally, being able to standardize processes across the group. Effective management of financial risks. Enhanced visibility allowing for effective liquidity planning. Utilizing advanced tools for mitigating operational risk and fraud. Better cost controls. And lastly, maintaining compliance with internal policies and external regulations. In closing, I trust that I was able to give you some food for thought. My hope is that you and your Treasury teams will take the time to address this accordingly and structure an action plan to make the necessary changes on your enterprise liquidity management journey. With the thousands of companies we have worked with, it has been our experience that the ones who take a more expansive view in their evaluation process are always far more successful. Allow me to leave you with one final question. Are you just looking for software to solve these problems? Or are you looking for a trusted partner that will provide you with a business solution? While system functionality is important, the evaluation must be more comprehensive and consider more than just what is on the screen in front of you. We strongly encourage companies to consider the whole picture and remember that not all Treasury solutions are built the same. Thank you very much for your time today. We look forward to engaging with you all further, and please reach out to me or my team during the summit, and feel free to contact us at any stage for any assistance. Take care, and thank you again.